Hello, everyone. Thank you for joining MAGNiTT's webinar aiming to discuss the state of venture capital in MENA and an overall recessionary environment. I'm happy to have you all here today. Please feel free to drop your questions in the Q&A box so I can answer them towards the end of the presentation. On a positive note, and before I delve into the recessionary mood, allow me to share that MAGNiTT, MENA PT's go-to platform for verified venture capital data, is expanding and will soon cover Southeast Asia in the second half of this year. How is MENA faring economically? To start with, the 3 years of adverse shocks weighed on the global economy, starting with COVID towards the end of 2019, which weighed heavily on the global economy. As the global macroeconomic as the global economy started recovering from the consequences of the pandemic, a series of consecutive events occurred, starting with the stock market volatility, with stock prices reporting decade lows, reaching the tech layoffs that took over the headlines over the past couple of months, until Russia's invasion of Ukraine that carried with it a pent-up in demand, supply chain disruptions, and commodity price rises. All these served the spike in inflation, which is leading to the monetary tightening policies that we're seeing in the market. Globally, there were hints of stabilization in early 2023. However, the outbreak of financial market turmoil triggered by the stress seen in the banking sector in the US with the collapse of Silicon Valley Bank, and in Europe with the crisis of the Credit Suisse in mid-March, has cast a shadow on global prospects as financial stability risks have risen significantly. So look at the numbers. Looking at the numbers, global growth is forecasted by the IMF to slow down to 2.8% in 2023, down from 3.4% in 2022. Inflation, on the other hand, is expected to bear the fruit of tighter monetary policies and to drop to 7.0%, down from 8.7%. However, it's remaining sticky at its upper bound. The moderation in global inflation is partly attributable to the declining commodity prices and to the sharp and synchronized monetary policy tightening. MENA economy, on the other hand, showed signs of resilience in 2022, despite the previously mentioned series of global shocks. However, this year, and potentially in the next, growth is expected to slow in the MENA region from 5.3% in 2022 to 3.1% in 2023, and with a mild recovery of 3.4% in 2024. Growth is expected to slow in MENA as tight policies to fight inflation, reduce vulnerabilities, and rebuild buffers start to restrain the economic activity in the region and in many countries, amidst an agreed oil production cut that will curb growth in oil exporters. According to the IMF, growth in the region is expected to slow down in the coming 2 years. This chart is mainly to show the growth, highlight the efforts of the Fed, followed by several central banks in the region to contain inflation. Despite the financial turmoil following the failure of the US banks, the Fed did not pull the brakes on its monetary tightening strategy. How did this impact the venture capital market in the region? Several occurrences in the past couple of years showed that geopolitical and macroeconomic events can have a significant impact on the venture capital space. Economic downturns put negative pressure on the ecosystem as investors may become risk-averse and reluctant to invest. However, this can lead to a decrease in the amount of venture capital funding available and make it more difficult for startups to secure funding. To start with the positive note, the MENA region saw a favorable record-breaking venture capital activity in 2022, driven by a strong first quarter. Funding, which crossed the 3 billion mark, saw a 10-year CAGR of 37% last year. Along these lines, I need to mention that deals in the MENA region require, on average, between 6 to 9 months to be closed and announced. So despite the fact that economic disturbances started early in 2022, the MENA venture capital market captured the impact late. Coming to 2023, the year did not start as strong as its prior, with the deals at their lowest since the fourth quarter of 2018. And funding is at its lowest since the fourth quarter of 2020, when we remove the impact of the 100 million plus deals reported in the first quarter of this year. Funding in the region declined by 13% year on year, even when we account for the mega deals, while the number of deals dropped by 55% to stand at only 94 when compared to the same quarter of 2022. MENA followed the global VC market, which saw its fifth consecutive funding. So borrowing this chart from CB Insights, we can see that the global market started bearing the impact of the economic turmoil earlier and saw its fifth consecutive decline in funding in the first quarter of this year. Mega deals, on the other hand, still strengthened the region's funding position. We cannot deny that mega deals strengthened the region's funding position. Both KSA and Egypt saw 100 million plus deals in February 2023. So Haaland's 260 million deal and Flowerd's 156 million, Nana's 133 million took over a share of 67% of the total funding in the MENA region, and were the main reason the quarters stood at a comparative level with its 2022 priors. So if we remove the impact of those deals, the funding in the quarter is mostly below all of 2022's quarters. How did MENA's top investment hubs perform? So basically, as we know, MENA's top investment hubs are UAE, KSA, and Egypt. Allow me first to dig deeper into a country-level view of the top three performing markets in the MENA region. Economically, UAE continues to be the region's trade, financial, and travel hub due to the progress made in economic diversification and reducing the hydrocarbon dependency. The UAE's post-pandemic rebound continued strongly in 2022, supported by the domestic and global oil demand. However, growth is projected to slow in 2023 to reflect global economic downturns and cautious production the cautious production schedule of the OPEC Plus alliance. Growth, however, is expected, as stated by the IMF in its latest World Economic Outlook released in April, to stand at 3.5% in 2023 from 7.4% in 2022. As for KSA, following its strong performance in 2022, economic growth is expected to taper off in 2023 by stagnant oil production, as part of the OPEC Plus agreed production schedule. Inflation, however, remains contained, supported by relatively strong US dollar, tight monetary policy, and a cap on the domestic fuel prices. Real GDP in the kingdom is expected to stand at 3.1%, which is even less than the growth it reported in 2022 of 8.7%. Egypt, however, has a bit of its own prospect on the economic level. 1 year through Russia's invasion of Ukraine and the tightening global financial conditions, Egypt continues to face a foreign currency crunch, a spike in domestic prices, and a sharp rise in borrowing costs. While triggered by the overlapping global shocks, Egypt's macroeconomic imbalances reflect the country's pre-existing vulnerabilities. Along the same lines, the growth in the country is forecasted to decrease to 3.7% in 2023 from 6.6% in a year earlier. Inflation, however, is expected to moderate, though remaining sticky towards the upper bounds. As we can see, inflation in UAE and KSA remains with a performance similar to the overall MENA region, while Egypt's spike in inflation is also backed up by country level factors mentioned earlier, of which I can add the exchange rate factor. The charts here come to ensure that despite the declines reported at the country level in most of the region's geographies, as we can see, the UAE, KSA, and Egypt kept their leading positions and remained the top contributors to MENA's ecosystem overall. Let's look at the red. As you can see, MENA and most of its geographies saw negative indications in the first quarter of 2023. While the growth in KSA and Egypt might seem like a breather for us to see some green, it is driven by Florida Nana and Haaland's deals. On a comparative level, the share of mega deals in the total MENA funding jumped from 12% only in the first quarter of 2022 to 67% in the first quarter of 2023, re-emphasizing the role those deals played in the region's total capital deployed. However, as we can see, at the level of deals, I will be digging deeper into those later in the presentation. We can see that there's a double-digit decline in the deals of most of in MENA and top geographies. On a country level, one of MENA's main players, UAE, had been reporting a decline in its number of deals since Q4 2021, landing at their lowest since Q4 2020 in the first quarter of 2023. The country did not report any 100 million plus deals this year. However, stripping the impacts of the mega deals seen in KSA and Egypt, UAE ranked first in funding, in non-mega deal funding. UAE, at the same time, tied with KSA in terms of the number of deals. What we cannot deny is that the VC market in the kingdom saw its best year yet in 2022, approaching the $1 billion mark. And mega deals reported so far this year gave the country its competitive advantage over its peers. However, bearing the impact of the $289 million deals coming from Floward and Haaland and Nana, the VC market in the kingdom saw a 50% yearly retreat in transactions at a time when non-mega deal funding declined by 80% year on year in Q1. Egypt was a totally different story. Do not be tricked by the high measuring bar. Egypt's VC performance was definitely impacted by its tight economic conditions. While the record-breaking bar depicts a long-time high, reality is the country saw the lowest number of deals dating back to the first quarter of 2017, with a decline of 83% when compared to the same period of last year. Removing Haaland's $260 million deal, funding adds down to only $20 million across the other 8 million deals, down by 88% from the first quarter of last year. Allow me to give you a data breather amidst the volatile performance of the region to show some of the startups that got funded in the first quarter of 2023 across the geographies across MENA's geographies in this market map, which represents one of MAGNiTT's recent features. So as you can see, there is a grouping of UAE's funded startups, so the different regions, UAE, KSA, Egypt. And as we go down on the platform, we can see startups funded by different regions and by different geographies in MENA. How did the industries perform? Were they on the same page? Were they performing better? Did some industries fare better than the others? At the level of deals, we can see that MENA's top 4 industries were unchanged. So as we can see the ranking to my left, ranking of fintech, e-commerce / retail, transport and logistics, and enterprise software was unchanged from the first quarter of 2022. However, we can barely see any growth. So as we can see, the percentage changes or the percentage growth is mostly negative with the exception of advertising and marketing and travel and tourism, which already come from a very low base number of deals. Fintech maintained its lead, however, despite its 56% contraction year on year. At the funding level, fintech again is the leader. The picture was a bit different at the level of funding. While fintech continued to capture the lion's share of capital deployed in the MENA region, supported by Haaland's $260 million deal, e-commerce and retail kept their second position, however, with a 99% rise that was driven by $156 million directed from Floward's deal and $133 million from KSA's Nana's deal. Long time top ranking, transport and logistics, lost steam with an 89% retreat in funding that dropped it out of the top 5 in favor of healthcare, media and entertainment, and edtech. Interestingly, and as we look at the top deals that MENA closed over the past 15 months, we can see that there is a variety of industries covering the top. There is a variety of industries capturing the top deals in the region. However, looking at the top 5 in the region that were closed in the first quarter of 2023, we can see that fintech captured 3 of the top 5, namely for Halan, Tabi, and Qulub, and e-commerce and retail captured the other 2 by Floward and Nana. And a look at the top 10 deals that were covered in the region, we can see that deals from media and entertainment startup Numi, healthcare startup Udawi, and El Mentor EdTech startup were present, backing up the industry's position among the top 5 funded in the region. Did the challenging environment impact round sizes in the MENA region? What's not controversial is that the recessionary / slow, if we do not want to take it to an extreme, economic environment weighed on most of the aspects of the venture capital space in MENA. However, in a look at the data, we can see that despite MENA investors returning their attention to early stage investments as a kind of a risk-averse move amidst the tighter liquidity measures, the breakdown of shares by deals that we can see here remained nearly at par with its post-pandemic years. The share of the 0 to 1 million round size remained the highest, capturing around half the deals, while the interest in the 1 million to 5 million, which MAGNiTT revealed as a sweet spot in 2022, did not dull out, with the round size still capturing a third of the total deals closed in the MENA region. And a look at the MENA deal sizes, at the mean deal sizes in MENA, KSA, Egypt, and UAE. The average deal flow might seem as the least indicative for the region in the first quarter of 2023, as average deal value for MENA, KSA, and Egypt was skewed by the 100 million plus deals closed in the geographies. So I would have loved that if this would have been more indicative, but the high averages are not really reflective of what the average deal sizes were in the region so far. However, a better representation of reality is seen in this breakdown by stage, which reveals the sharp contractions occurring at a stage level. So if we deep dive at a stage level, we can see early stages saw a minor increase from 1.8 million in 2022 to 2.0 million in the first quarter of 2023. However, we can see sharp contractions in Series A and Series B in both mean and median between 2022 and the first quarter of 2023. Median, on the other hand, hinted to a better reflection of valuations. Median levels in Q1 2023 in MENA, UAE, and Egypt geographies neared their average in 2021. However, KSA's Q1 2023 median was the highest among the past 9 quarters. Lower median values are hinting to the lower valuation that is ongoing in the market currently. The share of the top 5 deals was skewed by mega deals and a low base effect. While this was not the case for at least the 9 quarters that we're seeing in this chart, the share of the top 5 deals surpassed 60% of total capital deployed in the region. The skewness mostly came from the mega deals and the low base effect. The low base effect is mostly triggered from the fact that we have a small number of deals. The top 5 deals, the mega deals are capturing a high percentage of the total contribution to deals, and non-mega deals are a bit, the value of non-mega deals is smaller than the usual value that is covered. Was investor appetite influenced by the liquidity crunch? The answer is definitely yes. Active investors in Q1 2023 dropped to half their 2020 to their Q1 2022 levels, as investor appetite remained curbed by the challenging environment. The constrained liquidity is pushing investors to head towards a more risk-averse sentiment with limited participation in the venture capital space. In a more detailed view of investor headquarters, we can see that investors from KSA captured the biggest share, while KSA, along with MENA peers, UAE and Egypt, housed more than 50% of the total investors in the region. Looking at the names, and apart from the names, which are usually the top ranking, 4 of 5 of the top investors in the region saw declines in their number of investments in Q1 2023 when compared to the same period of 2022. Are exits still lagging behind the expected growth? 10 of the 11 exits in the MENA region were for UAE-based startups. However, 2022 was the year of exits, and predictions were made that this year would continue along the same lines, owing to a correction in valuations, the challenges of raising funds in an environment of higher interest rates, a subdued IPO market, and a more urgent cash conservation imperatives. It was likely that startups would be left with few choices aside from seeking acquisitions or consolidations as an alternative. However, the M&A market had a lukewarm start in the MENA region in the first quarter of this year, with 11 exits only, of which 10 came from UAE and only 1 came from Morocco. What is interesting about exits so far this year and over the past couple of months is the cross-border M&A activity. And looking at those exits, we can see that 7 of the 11 exits in the first quarter were cross-border exits, and an activity that we're seeing more from over the past couple of months. Allow me now to share with you how can MAGNiTT help you. MAGNiTT, our platform houses 25,000 plus startup info across 46 countries for 7,000 plus founders. We also have data for 11,000 plus venture capital transactions and 180 plus venture capital funds. The map shows our current coverage, which is the MENA region, Africa, Pakistan, and Turkey, and our expansionary plans towards Southeast Asia, which is going forward in the second half of this year. The planned expansion is we promise to cover Singapore, Malaysia, Indonesia, Thailand, and Vietnam, and I can assure you that Singapore data is a sneak peek on the platform. MAGNiTT maximizes value added for clients, which are governments, corporates, venture capitals, and service providers. Our directories show the startup valuations, investor capital, investor deployed capital, and exportable contact details. For all the following, please contact sales for any support you may need. The market map, which I shared earlier, our advanced analytics, which houses data for all the charts I shared, in addition to a lot more. Our APIs, which are access data on demand through our API, and our research reports, our research videos, and a lot from our research team. Thank you for keeping up with this. I'll open the floor now for some questions. Thank you, Mohammed. Will this recession in the region impact the appetite to create startups on medium and long term? So it's not about mostly the creation of startups. It's mostly about how will the startups guarantee their funding. If the funding flow gets easier with time, I believe that startup creation will regain its pace. Thank you, Ali. Did Africa perform better than MENA in Q1? Africa actually closed 113 deals for worth of $548 million in the first quarter of this year, apart from mega deals. So if we strip out the effect of mega deal funding, we can say that, yes, Africa did perform better than MENA in the first quarter. Thank you, Ayoub. As we move into nearly halfway through Q2, how do you compare the performance in MENA's VC market? That was our weekly release. So it's like 1 month and third of May. However, May was surprising. So after a very slow April had the lowest number of, so had 11 deals across 20 million, the lowest we've seen since August 2018. May came to close an additional 265% over April. So we have so far in May, $73 million closed across 4 deals only. However, the quarter so far did not see any mega deal funding, and the total number of deals is still a bit lower than what was expected, than what was seen in Q1. However, we can attribute this to the slow performance that usually happens during Ramadan. So usually the market performance is slower during the month of Ramadan, and April was mostly during Ramadan. What's the forecast for the ecosystem in Q2 and Q3? I answered for Q2. For Q3, the thing about Q3 usually in the MENA region is that ultimately Q3 is a low quarter because it encompasses the summer months. So if we look at Q2 at Q3 in 2022, we can see a slower performance than all of the quarters. So the catch-up was seen in Q4. Usually Q3 is a slow quarter. So I believe that Q3 is going to be even slower than Q1. Is the MENA region seeing accelerated deals this year? Yes. Out of 94 deals, the MENA region saw 14% accelerated deals. Which investor type was the most active in the MENA region in Q1? So similar to what we've seen over the past previous quarters, venture capital investors had the highest share. With 57%. We also saw interest from investment companies, corporates, and corporate VCs, which are regaining interest in the region. However, the major share was for venture capitalists. Is fintech still the top industry across UAE, KSA, and Egypt? UAE and Egypt, yes. Fintech in the first quarter was the top performing industry in UAE and in Egypt. However, in KSA, it dropped off the top 5 in funding. The kingdom saw growing interest from different industries, especially as e-commerce and retail took over the highest share in funding and in deals. How are startups in MENA coping with increasing interest rates, especially now that venture debt is gaining momentum? We have a video content on venture debt that is a bit more detailed. Venture debt is gaining a huge, remarkable interest in the region, especially as interest rates are getting higher and funding is getting tighter. So venture debt is gaining interest among top startups in the region. And please feel free to reach out for the video on venture debt. It has a lot of info on the topic. Any other questions? All right. At the end of this, I would like to thank a huge thank you for the trust of MAGNiTT's founder and CEO, Philip Bahushi, for giving me the trust on this. My research manager, Taimur Ahmad, for his support, everlasting support. The best research team, Noor Haider and Amira Sharaf, because without them, this would not have happened. And this wouldn't have reached you without the support of our great marketing team, and Omar and Swati. Thank you for this. Thank you for attending. I hope this was insightful and beneficial. Please reach out if you have any questions regarding this or any questions that were not answered. I would be happy to support on this. And please follow us for more videos on different topics in the venture capital ecosystem. Thank you.